Good morning, everybody. All right. So yesterday was consolidation day. Chop back and forth. You see the futures came up there. We'll take a look at the spiders. Get really, I guess, a better look at things. But I wanted to talk about a concept we call absorbing supply. What does that mean? It's another way of saying bullish price action at resistance. Now, we, as bars are created, we begin to think, okay, this is absorbing supply, bullish price action. In reality, just like when something is basing and we make the assumption that it can go higher, and we assume it's bullish because of the move that preceded the price action, we don't know that this will actually go up either. Right? And today being the second day of price action at the highs, we have to see whether today holds on, looks like this. It could be a red bar at the end of the day, whatever. So we're still up at resistance here. Yesterday, I talked about either a pullback or could we get a correction bar as a continuation pattern. Well, what's a correction bar? Well, we don't have one yet. Let me get my little trusty drawing tool out here. So a correction bar would be, let's say if today's bar actually came down under yesterday's low and came back up and looked like that, then we would have a correction bar because it broke under at least one bar's low and came back up to the top of the range. And that could be a continuation pattern. So we'll see if that actually develops or not. Another thing that could happen is today, while it's up at resistance here, you can see it's right there at the highs. If today was like a red bar, and that, of course, would lead us to thinking that prices were going to go down. Well, if it took out the low, it was followed by a green bar back up. That's what we call a 180 bullish 180 reversal, and that would be the same as a correction bar or a continuation pattern. That could be a pattern that develops. What's common among these patterns is prices went down and they came right back up again. Right? So there was some type of a retracement that was then negated in some way. Now, depending on whether it's 1 day, bottoming tail bar, if it's 2 days, bullish 180, if it's 3 days, it could look like a little consolidation day in between the red bar and the green bar. I mean, we don't know what's going to develop here for the moment. It's at this resistance area and chopping around so far. And as you can see, it's just forming a little support area and it's up at this resistance area. And we're basically neutral in no man's land, so to speak, as prices potentially absorb supply. And we'll see if it eventually can work higher or what it does. So again, we're just marking time here as prices are at resistance, waiting to see what happens bar by bar as to whether it pulls back, how much it pulls back, whether it goes sideways here. You don't like being neutral, Robert? Well, nothing any of us individually can do to change things here. Maybe if we start trading some of these penny stocks and group together, we can move something that institutions aren't involved in. Then it becomes a these penny stock rooms, which can do well with low price stocks, but it kind of becomes that. Remember that game you played as a kid where you walked around in circles and the music stopped and somebody was left without a chair? That's what it's like, and musical chairs, and like who presses the button last gets stuck holding the thing as it begins to tank. So anyway, we're seeing what's happening here. We always do every morning. We look at the broader markets, and then Dan looks at gappers and open interest. Could be iron condor time, sure. I mean, yesterday we spoke about SPX because it was Monday, and we talked about 45.25, and was it 43.60, 65. Now, I was for the lower end because it was further away. Now this is, the futures here, but at SPX, those were the numbers. And had you done both, would have been, fantastic. Yeah. So, and I agreed, McGraw said 45.25, and I agreed that it shouldn't go there. I was just more comfortable with the downside not being tagged. In any event, it went basically nowhere yesterday, and you could have done both, and good. If you did, great, good. All about managing and your own personal comfort level and what that might be. All right. So here we are. So far this morning is inside yesterday's range on the futures. We look at the spiders and see what they're doing, where they're at as far as a gap goes. And, let's say over the weekend letter, and at the end of the day, Friday, my preference would have been a gap up yesterday that was then sold, and then prices come down. That didn't happen. It was actually, a gap down, and things came back up again. Well, no, it was this day. It was neutral and went nowhere. So here we are with a day that went nowhere at resistance. We're at 466 right now. 466, actually gapping up. Looks like the top of the range there. Let me move that up there. Pretty much up at the top of yesterday's range. And one of the things to look for here at the open, only because now I'm looking for some type of correction, just because it's up multiple days at resistance. For me, that's common sense. Maybe it can go higher. We'll see. But one of the things to look for a possible, if it is a reversal, will be that it opens up like that. And then immediately it will, let's say it opens here. Maybe it goes a little higher. The 5-minute pokes up and right back down again, kind of like what I call a gotcha setup, where it breaks out and then immediately comes back in again. And that should get things coming lower. And then we just look, well, it's got this support right there. We got this little trading range from yesterday. So unless it really can break below 440 or thereabouts, we're basically stuck in nowhere. But for a scalper trade, that could work. Right? Unless we can get below that 440 level on SPY, we're just basically still neutral. All right, let's clean this up. Go to the Qs. Yeah, the SPY death cross. The NASDAQ had its death cross here, and the spiders had that right at the low last week. And the Dow, happened, on that day, right at the low. The infamous death cross. Moving average crossovers are a terrible way to make trading decisions. All right, so NASDAQ futures inside day going nowhere, drifting back here a little bit, trading range, so on and so forth, same thing. On the bullish side, this poked under the lows and came right back up again. And that was, so a little downside shake out there, but still just drifting. Qs, where are they? 350, 351. Let's move that up there. Basically nowhere. So marking time, absorbing supply. And why don't you accept a BS? What is, instead of consolidation or correction because of institutional buying momentum? What is BS? I'm reading a comment on YouTube. What is BS? Anyway, we'll see if it tells you what that is. All right. I'm guessing maybe going higher. So if you mean in some way that BS means it's just going to go higher, of course that could happen. Part of our systematic method of analysis, a buy setup will be a pullback, right? A correction is a pullback. And so when I say correction happens in one of two ways: price or time. So when I say correction, that means it's pulling back, right? It pulls back and forms a buy setup, and then it goes up. We spoke about that yesterday. A correction bar typically happens in much more bullish market and happens during bullish price action at resistance, and then you get a continuation pattern. You don't always get a buy setup. So let's go back. Let's see, I got some time to talk here. Let's go back about 25 plus years, right? Let's go back to like 1990 or so, right? Before there was an internet, right? When I started in the late 80s. And all I knew about was buy setup, retracements, buy pullbacks, right? Or breakouts. Had no concept of a continuation bar and that kind of bullish price action and all the things we talk about today. Lo and behold, as the internet became something of what was, and everybody got to use, and information began to move around a lot faster, right? All of a sudden, pullbacks didn't happen as much as before. So markets evolve as technology evolves, as trader education evolves, and so on. And so during a different market environment or a different point in time within a specific market, based on the previous price action, you don't get pullbacks or what you perceive as a buy setup. You get bullish price action or continuation patterns. So based on this momentum move, look at yesterday's video, market internals, the greater probability would be, because institutions are institutional buying momentum, as the words you used, the greater possibility would be bullish price action and a continuation pattern, right? Hey, when McGraw saying, interesting book, not my book. I know what you're talking about. Someone else. Hey, don't talk about someone else's book here, McGraw. I won't like that. Oh, we're having fun already. It's early. All right, we love you, McGraw. So that's my point, Starville's. So it could pull back. We have to be open to different possibilities, right? But historical patterns is what I'm saying here as the idea of bullish price action absorbing supply, a correction bar, is what should happen. Now, if prices pull back like this, right, they shouldn't pull back that far. And that's why yesterday I said, hey, this should stay in the upper half of the wide range bar because of the momentum move. This shows explosive, strong demand, right? Taking in whoever wants to sell, they're going to take it. We don't care what the price is. We're just taking it, right? So now this demand, right? We know that it occurred, right? Institutional buying, they should step up long before it gets down here. And that's what creates bullish price action. So you shouldn't get much of a pullback based on what we know occurred. Otherwise, something is beginning to change. Why such bullishness, right? Why such bullishness beginning to turn bearish and pulling back again? So we need an adaptive, right? McGraw's used this adaptive, what blah, 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 whatever he said there. I don't know how old that book is, McGraw, but maybe, a lot of people have taken my courses and maybe they put their own thoughts into whatever and use different words. But anyway, this markets begin to change. This gap reversal bar here began to change things because after a consolidation and taking out the highs, it's supposed to keep going up. So bar by bar analysis. Oh, that's This wasn't supposed to happen. And now those buyers, this is what we call the psychology of the pattern. Those buyers that were accumulating there become sellers, and supply comes in and drove it back down. So similarly to what we have now, right, if we get bullish price action, it should break out and go higher. If for whatever reason it was to break down, well, now everybody that was accumulating here, the thought process begins to change. And it's like, what the hell happened? Well, probably some news or whatever. I don't know. But what the hell happened? We know what was happening here. Something changed. Uh-oh. Hit the bid. All right, let's continue here. We're getting too long into this. You want to understand all of this at a deeper level, join the green room or take a course. All right, MT live tomorrow. Let's continue here. Same bullish price action. All right, same bullish price action at resistance. All right, we'll see if it holds on to the gain here. And Bitcoin, all right. I spoke about this yesterday. It's beginning to pick up steam. Looks like it can get to the top of the range. Bitcoin stocks, Bitcoin ETFs. All right, we're not concerned with all of this. We're seeing if we can get up to the top of the range. Why? Look at the hourly chart. It's got a void to get up into there. Not that big a one, but, suggesting it could go up. All right, crude oil up again, might not get much further than this topping tail there. It came down pretty hard. Silver down a little bit. Looking to see yesterday, we talked about maybe a retest and reversal pattern here. Crude gold, similar situation. Love to see this poke under these lows and come back up. Different kind of correction bar. Transports up at resistance here. A lot of the airlines look like they could pull back a couple of days. And interest rates. What is going on here? Look at that. This yield curve is getting really close. Look at this. Look at the 5-year. That number is higher. That number is higher. Looks like it's inverted. Yep, look. It's negative. Markets don't care. It's something they should care about. I've explained the difference, what's going on with this yield curve versus these down here. It's really weird. I don't think I've seen this in before. I have to go look at the charts, but this is weird what's going on. So this is bearish. So far, this is neutral to bullish. So kind of one of the legs under the market, but it's really weird what's going on. Anyway, all yours, Dan.
But yeah, I thought you said, so just since this is an important point, are you always wanting all three of these to be in agreement? Or when do you start taking note of 2 out of 3 of these?
Yeah, down here where the shorter one, it's just like looking at a 1-minute chart versus an hourly chart. It's kind of an analogy of what we're doing here. It's like these shorter ones starting to, these are all moving lower together, but these move faster. So, excuse me, you could see eventually, this got inverted first. It came down under the red line first. Then this actually came down there. This is so far away, it's unusual. But it could be because the Fed is so behind the curve. Now, as this number starts to increase, which you can see it is, but it's lagging so much. And part of the thing is that, look, as this goes up, the assumption is the economy is going to slow. They're trying to stop inflation, right? That's why, the Fed, they want a stable. The Fed's job is price stability. It's another word of keeping the inflation stable. We don't want inflation to become lower. We want it stable. He talks about 2%. So the weird thing is, why is this going up so fast? The 10-year and the 30-year. Normally, what happens is as this goes up, they begin to come down as things begin to slow, yet they continue to go up. And that's the weird thing. So the idea behind intermediate term interest rates like this is that they're going up because there's a demand for money and economic expansion. Well, what the hell's going on here? So it's interesting what's happening. Anyway, you've got 5 or 6 minutes, Dan, to review. No, it's not hyperinflation. I don't know. With this inversion, it's more of like the idea of stagflation, or, I don't know. It's certainly odd. We'll figure it out.
All right, all our opens are fine. We started nibbling on some of the Bitcoin things with naked puts and put spreads. So those are fine. Our little Weejo we bought yesterday is gapping up. Everything's fine. Let's go right to a couple on our watch list. UNP, we sold a put, but this looks like a directional now over the high. I'm personally shocked the market's holding up this well after post FOMC, and then it shook off. Powell shaking the market yesterday, talking about inflation being higher, and now we're back to the highs. I mean, I told Greg pre-market that it looks like the market doesn't want to come in, regardless of the news and the inverted yield curve. Let's look at some gappers here. There's not many earnings, but all right, shoot, this one's falling too much. UPST, this is sell setup, topping tail, bearish gap. I posted a 135 call spread, 30-minute low, but it might be dropping too much now. This little guy had a horrible start to an IPO, had a failed gap breakout the other day, but that's worth watching. See if he can do anything. SMFL, I'll put that in a window. ENSV gap breakout here. This is making the turn, and it's gapping up to here. We'll watch that on a pullback. Disney is under fire. That's when the CEO came out last week and started challenging Florida's bill on GBT, whatever. But my immediate thought was, why are you getting involved in this? I don't see any positive, outcome. And so now he's getting blasted, and people are going on strike today. He's having to, come out, form these new committees and tours. We're going to go talk to our employees. And I don't know. I personally wish corporations and sports people would stay out of politics. Just do what you're paid to do. Zim. Yeah, I saw that gap down. All right, and that explains it. That's a Bitcoin stock. Let me see if I wrote it down. I started making a list of Bitcoin stocks and ETFs over the weekend. BKKT, I'll add that to the list. Let's take a look at it. But anyway, this chewing, there's so many stocks that are extending here. They could set up continuation patterns. BKKT. I like it. I like it, Emmanuel. 30-minute high. Put it there. It says technology, software infrastructure. All right, so I'm just relying on you to say that it's a Bitcoin stock. Is that correct? Trusting you, buddy? Because TC doesn't have it, is it? All right, let's see a question here. Jacopo VLCN. Yeah, another bottoming pattern. Put it on the list. D-Pro. Big old gap's way too big for me, but the weekly, well, yeah, gap's too big. TME had earnings, but no pattern. Yext, I think a secondary offering of some sort, I don't know, but no pattern, bullish. Okta is another bearish gap, similar to Upstart. It's a sell setup and a bearish gap, but that one had wider spreads. Let's keep an eye on that for a 30-minute low and also a call spread. Burl, yeah, that's a short. Nice downtrend. Breakout failure. Yeah, I like it, Steven. A few others here. Write them down to have in your back pocket. TJX, Greg mentioned yesterday, set an alarm yesterday's low. Tyson, sell setup, 180 reversal. And Twinkie, same sell setup reversal. So those are now add your Burl. So those are 4 shorts that I like to watch. Hess is a breakout, but it's more vertical, Thomas. We don't buy vertical breakouts from the bottom to the top of the range. Compare that. We had a big discussion yesterday. I thought you were there. It's not Oxy. EOG, here it is. Compare it to EOG. You see the huge difference? This one, you had a continuation bar and it's rested. So this one is a superior setup. Yeah, the whole K-Web is up again. Baba, yeah, I looked at a couple of them. The problem is there's no daily setups whatsoever. But day trading. This AYI was in the weekend letter. My alarm just went off. I like that little 1, 2, 3 continuation. Marriott, no great pattern to me, Emmanuel. I'm not sure what you're looking at. All right, we just bought this into the close or over here. If you wanted to just hit the bid and take some money, let's move stop break even at least.